Let's just say for the moment that you were given $1 million or whatever sum was necessary, and you could look around Knoxville or look around all of Tennessee if you want and buy into any three businesses, between now and a week from now. Private businesses, not trading or anything of the sort. And you got a week to do it or you have to give the money back. What will you be doing during the next week? I mean, you can look at all these companies. Some of them you're quite familiar with. Some of them you're less familiar with. Some of them you know by reputation. Some of them you know the management. Some of them you don't. You know their competitive situation. What will you be thinking about during that 7-day period? How will you actually be screening these companies out? I think you'll look for three businesses, and you can't trade them after you buy them. You're going to own them the rest of your life. You're going to be looking for businesses that have enduring competitive advantage. You don't want to buy a Burger King franchise just because nobody's come within 10 miles of it yet, because Wendy's and McDonald's and all of those will be there pretty soon. I mean, it isn't necessarily who's earning the most money now. You're going to look for something with enduring competitive advantage. Now, that takes a business with some kind of a moat around it, because capitalism, by definition, is a system where every time somebody has an economic castle, somebody else is going to come after it. I mean, it's just the nature. If you open a restaurant that's successful here in town, somebody's going to take your menu, probably take your chef, maybe cut your price, maybe offer a little more parking, maybe be a better okay, whatever. I mean, capitalism consists of going after the other guy's castle. If that's the case, you want a castle with a big moat around it. And there's a lot of ways you can have a moat around something. You could have it by patent protection. You could have it by location in certain areas. I mean, if you have something in people's mind, like Coca-Cola, 6 billion people in the world, practically all of them have something in their mind about Coca-Cola, largely favorable. They don't have anything in their mind about RC Cola. And if RC Cola spent $1 billion advertising, they wouldn't have anything in their mind about RC Cola. But they've got something in their mind about Coke, and generally it's favorable. That's why Coke wants to be where people are happy, because they want to be at the theater. They want to be at Disney World. They want to be at the World Series. They want always have you drinking that drink of Coca-Cola while at the same time experiencing happiness. And if they do that, they're going to sell a lot of Coca-Cola. And it won't make any difference if somebody is a half a cent less on some serving than Coke. So that's an enduring competitive advantage. And you want it run by honest and able people. You don't want to go in with a crook, and you don't want to go in with a dope. Now, the best businesses to buy are the ones where you could have a dope in there. I mean, Peter Lynch says, buy a business that's so good that an idiot can run it, because sooner or later one will, and there's some merit to that. In fact, I got a question the other day from this student group, and they said, what's going to happen to Berkshire when you go gaga? And I said, well, Berkshire's so good that I can go gaga. In fact, I may even be, those are the kind of businesses to own. So you want a management that's able and honest. And then you want a price that's sensible. And that's what you'd look for. You'd go around Tennessee, got a week to do it, and you'd immediately screen out a whole bunch of things. You just know that they weren't a fertile area, That's an important thing to be able to do, to know, just get rid of all kinds of things. There was a great article in the New Yorker 30 years ago when Bobby Fischer was playing Spassky in a famous chess match which drew attention around the world. And they examined how the mind could, with billions and billions and billions of possibilities, how it could group things so as to immediately cast it down to where you had like 4 options. And of course, when the humans play something like deep thought, or whatever the latest version is of the computer on that computer is making maybe 700,000 or 1 million calculations a second. And the human mind is competing against that. But the computer is checking every possibility. And the human mind somehow has this ability to cast out 99.999% of those things that the computer has to go through in order to focus on the 3 or 4 possibilities that really make sense. And investing's a lot like that. It's not that tough because there aren't that many companies. But you want to cast out all kinds of things. If somebody told me that my life depended on picking among the Dow Jones stocks a group of 10 that would be the best performers or outperform the index as a whole, I would spend my time thinking of the worst companies in there. I would cast out things, and then I would figure I left those behind, and that's an easier way to approach the problem, actually, than trying to pick the 10 best. If you were thinking about the state of Tennessee, there's a whole lot of things you wouldn't examine. You just figure they're too tough. You might decide, car dealerships were too tough. It's always going to be competitive. Who knows whether Ford or General Motors are going to be selling more cars 5 years from now, or whether there's going to be tariffs on foreign cars, or who knows. So you just say, I'll give up on car dealers. I'll think about something else. And that approach that you use there is the same approach you really want to bring to the stock market. You've got 3,000 companies tonight you can look at on the New York Stock Exchange. There's a valuation on every one of them. It'll change tomorrow. You don't have to play. Once a year, if you have 5 good ideas in your lifetime, you get very rich. I tell students sometimes they'd be better off if they had a punch card when they got out of school with only 20 punches on it. Because then, instead of listening to somebody at a cocktail party and then going out the next morning and buying some shares, they'd really think about every punch. And that's all the punches you get. 20 punches is plenty. You just have to make sure that you don't do any of them for frivolous reasons. We never want to buy anything small at Berkshire. It just doesn't make any difference. We want to think about things that can move the needle. And that gets tougher as the capital gets greater. But that's the way to focus on investment.